Success in life is founded upon attention to the small things rather than to the large things, to the everyday things nearest to us rather than to the things that are remote and uncommon. Booker T. Washington. My friends, the small things, what? 10 to 15 minutes a day that are nearest to you, that is getting on your computer, doing the work yourself, learning how to do this. You will only learn by doing. All knowledge is based upon experience, as Einstein tells us. And you need to experience this. You will learn the nuances. Being in the market 10 to 15 minutes each and every day. Practice trading when you think you're getting good. Start doing some small fractional trades with a little bit of real money to see if you really have what it takes. And if you don't, you just keep training until you get it down. The prize will go to those who stick with it. I just can't tell you that enough. I pound on it every day because it is the truth. It is the truth. This is not easy, but it is doable. And how do you learn it? You learn it by doing it. And if you will stick with it, you will figure it out. But the problem is most people won't. They just won't do it. They won't put in the work it takes. They think there's some magic pill. They would rather be gamblers than investors. They would rather seek that short road that leads to nowhere rather than doing the work, putting in the time. And I keep telling everyone, if you'll just put the time in, all the time it took for you to gain the skills, you'll earn it back in short order. So keep the faith, friends. Let's move forward. We see everything down but bonds for the day. Now, let's look first at the S&P 500. We see that as we go into Friday, it is down 0.68% for the day. We have a green spinning top, almost a doji. Now, it's a solid green, so that again is indecision tending down. Price percent oscillator looks like it's a little more than flat. It is negative. Derivative oscillator is still negative. So the overall, again, push in the market is still downward pressure. We look at the 2-day, even with 3 days of, well, we have 3 days worth of candles. This is the first day of the latest 2-day candle and then the prior 2 days pushing up. We see, though, that the price percent oscillator is still negative and flat. Derivative oscillators negative, losing downward momentum. So market was down on this first day. Heikin-Ashi candlesticks are showing us where the average pace of price movement is. Look at this half day. You can see where things ticked up for 3 days and then slowly starting to lose some energy on Thursday. Price percent oscillator going flat, derivative oscillator positive, losing upward momentum. So again, that's where we are on the S&P. We will continue to watch and see how price moves and if and when it continues to roll over and head down. There still is that downward pressure on the market, some possible decoupling. What do we see on the Nasdaq 100? Down pretty big for the day, 1.47%. Consequently, we have a red down candle, not a solid green, but a solid red. And we have a spinning top, not a doji, so more, again, more downward pressure being shown here as far as Heikin-Ashi candlesticks goes. Now, the price percent oscillator, not laminated, but barely negative. Derivative oscillator is negative. We do, again, see downward pressure here. As we look at the 2-day, we can again see where the first day of this latest 2-day candle, because of the way Heikin-Ashi candlesticks, and if you don't know what Heikin-Ashi candlesticks are about, take our training. I'll put it at the end of today's video so you can easily find it. Understand why we use these average pace type candlesticks. They are different than your high, average, low, close. High, low, let's see, high, low, opening and closing. There we go. I was forgetting one of those. But these are measured differently. Now we see the price percent oscillator heading down. It's still negative, and the derivative oscillator about flat, maybe losing a little bit there. But again, slowing down in that up movement. Again, like the S&P, we can see where things were up for a couple of 3 days and then really moving over down in the afternoon. Price percent oscillator positive, heading down. Derivative oscillator positive, losing upward momentum. So we'll see how this week wraps up on the S&P 500 and the Nasdaq 100, both of those had weekly vertical crossovers last week. Not real strong ones. The derivative oscillator on both those charts stayed positive, didn't rotate over, however, did rotate over this week. So we'll see as things progress. What about 20-year bonds? 20-year bonds are up for the day, 0.56%. Now again, we can see where a lot of the energy from last week has really burned off with bonds this week. A smaller candle, not reaching a higher high. Price percent oscillator consequently going a little less than flat. Derivative oscillator losing some momentum. Both of those are still positive. We look at the 2-day and we can see that down for, again, 3 days, moving down at this point, hasn't crossed over. Price percent oscillator positive, but heading down. Derivative oscillator positive, losing upward momentum. So again, we saw 4 strong up candles, and then over the last 3 days, burning off some of that energy. We look at the half day. We can see where things were down for 1, 2.5 days. And then over the course of this past day, moving up some is the way it ended the day, but that price percent oscillator still heading down, derivative oscillator still heading down. Overall, of course, still some upward pressure on bonds, and if we see stocks really start hammering down over the next few days, we could probably expect bonds to take off again. Remember, this last weekly vertical crossover bond started off very weak. Moving into that second week after the crossover, gained a little bit of energy and then popped up strong on the week ending the 3rd of December. As I record this, that was last Friday. And this week, again, losing some of that momentum. So we'll watch and see which way things go, but still upward pressure on bonds, downward pressure on stocks. What about gold? Still downward pressure on gold, down for the day 0.61%. Going into the 3rd week of down movement, and as you can see, though, not reaching the lows of last week, but look at that price percent oscillator. Might have a weekly vertical crossover before all is said and done. Keep your eye on things on that price percent oscillator. It hasn't crossed over yet. It's in the negative territory. It's below the midline, so it's gone into negative. So that negative 0.08 is actually higher than negative 0.09. So we may have a crossover. Look at this, though. The derivative oscillator is still positive. So keep your eye on things, and we'll see what happens on gold on Friday. When we look at the 2-day, we can see where gold had moved down, hitting its most recent low back on Thursday, the 2nd of December, and over the course of this week, really sliding sideways, not reaching a new low. Price percent oscillator heading down, derivative oscillator negative, but losing downward momentum. And we look at the half-day chart, and again, that's where we can see that sideways slide bumping down, then sort of moving up, and now over the course of this day, after a lot of green up candles, we can see things losing some energy, but that price percent oscillator is still positive and flat. Derivative oscillator positive, losing upward momentum. Lastly, we go to Bitcoin, down 4.44%. When we look at Bitcoin, we always start with all of our charts with that weekly, and man, big down candle for the week. We had that weekly vertical crossover last week saying, hey, not a time to be putting Bitcoin into your practice portfolio, period. You're looking for a buy-in point. This is not it. And what do we see happen this week? Acceleration down. Our charts are wonderful for Bitcoin, aren't they? Extremely helpful to help you see what's happening with Bitcoin, with this cryptocurrency. For those of you who are Patreon members, you also know that we've just started our charting crypto, where we look also at Ethereum. We look at Bitcoin, the Grayscale Bitcoin Trust. We look at a number of various ETFs in the Bitcoin space. So if you're interested in cryptocurrency and crypto-related ETFs, you need to become a Patreon member. There's a few slots left in there, and we've started doing this special broadcast on Wednesdays for you. The inaugural one went out last night. But we see all this downward pressure on Bitcoin, derivative oscillator gaining downward momentum, price percent oscillator spiking over, going down today, just trundling on down, moving down, like we said, down for the day, 4.44%. Price percent oscillator moving down. Derivative oscillator's about flat there. We look at the half day, that's where you can see where that flattening occurred over a 2-day period, the 7th, and then the morning of the 8th, and then things started moving over yesterday afternoon. That would have been Wednesday, and then down on Thursday. So, not a time to be jumping into Bitcoin in your practice trades. We'll wait, watch, and see. And when we start seeing a rotation over going up on Bitcoin, like we saw back when we had the last weekly vertical crossover going up, somewhere around that $30-something thousand mark to a high of what? 68,000. Again, beautiful. That's where we are, folks. As we end the day, we so appreciate you being with us. We love to hear from you. Feel free to write us, cw@chartingwealth.com. Don't hesitate to go ahead and subscribe for free at chartingwealth.com. You get every day those special trainings that we do. We have a special training for you today, a good one. It's called Use All the Charts All the Time to Stay Out of Trouble. Boy, that is a good one. And it comes every day in your email with this training. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.